I am going to start just because I've got a few housekeeping bits to go through. So whilst people are still joining, I will do that. For those that don't know me, my name is Angela Kathari. I'm Head of Education here at Moore Kingston Smith. I will be helping to facilitate the webinar today. Certainly on screen, Geraint Lewis, who is an expert on all matters of VAT, will be the one imparting a lot of his encyclopedic knowledge for us. And I think what I love about when Geraint presents is that there's a huge history of VAT case law that really helps us understand where maybe some of these things come from, and certainly some of the existence of some of the things that are around at the moment. How have we arrived here? I'm not proposing to go through Labour's journey on how VAT appeared on school fees, but since July, since it was announced, we have had to field a huge amount of questions, some of them quite repetitive. So what we've done is, for those that haven't been on our website, we have created a frequently asked questions element to things, and we will continue to update those as we get more information and as clients and non-clients come to us asking us questions. We've also given you at the same time a sort of box that you can enter into that gives you information on mergers and acquisitions. We're inevitably being asked quite a lot about certain schools that are obviously quite worried, coming from a position of strength, wanting to find a home, looking for financial security, totally understand. And I've just given everyone a link to our corporate finance department who are dealing with a number of those inquiries. We're also being re-asked, and again, it is on our website, about those schools. And I know, surprise, surprise, that some might be listening to this. There are a number of schools that still haven't come out of the TPS and are now revisiting it now that they have a bit more certainty that Labour are obviously going to adopt this policy. So again, being able to contact MKSFS and Ian Thomas and Tom Breeding and the team, the information's all there. And now we've landed with a VAT seminar, which I know there have been a number, either through ISPA and certainly other sources, that have been put on. But our seminars tend to be practical. They're the questions that I ask. They're the questions that our client asks. And so today we are going to look at the VAT from a practical point of view. And we propose to cover some sort of key areas that really encompass some of those questions that we have been fielding, from the immediate issues, the payments in advance, still those sort of little grey areas and things that you need to be mindful of. The issues that we think are going to arise from January 25, and also possibly what the future is going to look like, as much as we can know from the information that we have today. It's a really tight session, an hour's not long enough. I am going to be possibly interrupting Geraint in his slides if we feel that we really do need to move on. Absolutely, please type in and ask your questions. We will try and get through as many as we can. Certainly, there inevitably are some that are asking the same question but in different ways, and we will try and answer those as we're going through. If not, we will try and update our FAQs on the website, and we'll send you a link when we've managed to do that as well. But without much further ado, because as I said, we have got a lot to get through, I'm going to mute myself and pass you on to Geraint, who is going to talk all things VAT. Over to you, Geraint.
Oh, thank you very much, Anjali. As I said, this is very much in putting this together. I wanted to cover some of the questions that I think you need to be considering and talking to your governors, directors, whatever the corporate structure happens to be about, and things that you need to be looking at now, things you need to be looking at early in the new year, and possibly looking a bit further out. I will profess there is not a great deal of technical stuff in here in terms of information and technical analysis. That was a decision that I made in putting these together. I'm not sure anybody wants to look at a photograph of me, but if anybody feels the urge, that's a brief background of me. I've been doing VAT now for, oh good Lord, almost 35 years, which is probably far too long. So we'll skip quickly along. As I said, the first session here, immediate issues. So these are things that I think you need to be considering and looking at and working out what your position is in the coming weeks. Okay, I think 25-26 fees has been a subject of discussion. Lots of clients have been talking about us, and in particular, where those will land in terms of an increase. So what do we already know? Well, I think across the sector, the increase for the spring-summer term is about 14%. We know a couple, Eton, I suppose, is the most high-profile one that have gone the whole hog and gone straight to 20%. What's the picture going to be like post-September 2025? I think schools are anxious to try and mitigate the additional 20% VAT as much as they possibly can. My question, and I think this is an important part of whatever is being done now for sort of budgets for that year, is how long is that plausible? Anecdotally, where we've seen VAT added to other goods and services over the years, the price differential has been made up pretty quickly. I think the other point that needs to be talked about is cash flow planning, especially for schools that have got a turnover of more than 1.35 million. The reason that 1.35 million is in there, that is the upper limit of the formal cash accounting scheme. So remember, VAT is normally done on a accruals basis. So, typically fees are invoiced in advance. VAT is therefore payable on the full value of that invoice at the date of issue, not at the date of payment. Now, there are things that can be done around the paperwork you issue, and there are various strategies that can be adopted. But clearly, that is an issue that a lot of schools, I think, are going to have to give some thought to. Practical stuff. Okay, we know applications for VAT registration from new schools. You could put them in with effect from the 31st of October this year, those schools that are not currently VAT registered. Those of you who've had the joy of dealing with HMRC in the past over anything will be familiar that they are not the most, how can I put this delicately, fleet of foot of organisations. We all know that they've got severe delays and administration issues. There is apparently going to be a dedicated team dealing with new registrations for schools. How well resourced that will be, or indeed how effective it'll be, pass. But I think you should be working on the assumption that it will take HMRC several weeks to process these applications, and it would not surprise me in the least if there will be a number of schools who applied for VAT registration in November, early December potentially, where those registrations are still not in place by the 1st of January next year. A lot of schools will need to think about either adapting their existing accounting systems or looking, in some cases, perhaps I think, at wholly new accounting systems to deal with the requirements of VAT accounting and record keeping, which is something that obviously a lot of schools have not had to do in the past. You also now have the added complication, and I profess not to being an expert on this, but VAT is the first element of the UK tax system to adopt the Making Tax Digital agenda, which essentially means that VAT returns are not only submitted online, but need to be linked to various other underlying systems and records. You have a choice. You either need to look at an accounting system which is MTD compliant and can do all the necessary links and etc. for MTD, or else the adoption of bridging software, which enables you to work that out. And one of the complications I will be coming on to later on is that most schools will be partly exempt, and by and large, most of the off-the-shelf accounting systems, and indeed Making Tax Digital itself, doesn't play well with partial exemption calculations. So there's a host of admin and accounting systems issues that people will need to get a handle on, and need to get a handle on quickly. So it's not exciting, but it needs to be done. For those schools who are already registered, the same is true, but perhaps on a lesser extent. There will be need to review and adapt current accounting policies. You're going to have to look at the existing partial exemption methods. All partial exemption methods need to be amended to reflect changes in the nature of the business, and obviously this is a significant change in the VAT profile of the business. There will be a question about split year partial exemption calculations, because the level of recovery for those schools is going to change dramatically on the 1st of January. and that's a year that normally runs to the end of March. Whether some schools, for example, want to look at having a long period adjustment that potentially takes them from the 1st of January next year to the 31st of March 26, don't know. But again, these are all things that need to be thought about in real time. Most of this stuff is things that can be done, but needs the blessing of HMRC to do it. Most of it needs to be done formally in writing. So again, you need to think about how long these admin things are going to do to get sorted. The other thing that a number of people I talk to don't seem to have focused on is obviously what we're registering for VAT here is the school. So it's going to cover everything the school does, not just the provision of education. Now, most schools, in my experience, who are not currently VAT registered will have various types of miscellaneous income that would be subject to VAT if the school were registered. So I've listed a few of them there. Historically, those could have been ignored because they were below the registration threshold, but now things will need to be looked at to ensure that income is appropriately caught and appropriately recorded. I will just stop for a minute just to pick up on tuck shops, which is interesting. The current HMRC guidance says that the VAT liability of tuck shop sales follows the liability of the education. Now, if the education now becomes taxable, logically that means the tuck shop becomes taxable. But the legal basis of that treatment is not quite the same. So there's an interesting one that I think may well need to be revisited. Okay, payments in advance. We know that lots of schools either had pre-existing payment in advance schemes or set up new ones, and that a significant number of parents made payments in advance in the months leading up to the 29th of July 2024. What I'm seeing is a significant amount of misunderstanding about what the statements HMRC have made, and indeed how this has been dealt with in the past, in what this means. So, first of all, the fact that the law as it is currently being presented says that anything made after the 29th of July 2024 will be taxable doesn't by extension mean that anything prior to the 29th of July 2024 is exempt. HMRC have already flagged up their desire to, or that they will be looking at this. So you're looking at managing an extended period of uncertainty. This is almost certain to go to litigation. That litigation will probably involve you getting to the Supreme Court or the Court of Appeal. So we're not going to have a final answer on this until, I don't know, 2030. So how do you manage the need to budget for that potential future liability? If we look at that timescale, if we get to 2030 and these payments are subject to VAT, could you collect additional sums from those parents? The child may well have left, family may have had a change of circumstance, divorce, breakup, move abroad, who knows? How are you going to manage that level of commercial and financial uncertainty? So, do you set aside a portion of the payments to fund the future VAT cost? If so, what does that mean for operating income? And that a question, does your payment in advance scheme actually allow you to do that? Could you put 20% or 16% or just a number to one side and say, well, we're going to use that to fund VAT just in case? Penalty and interest costs. If you don't account for VAT on this income, in all probability, should it become subject to VAT, HMRC will it look at penalties and interest, which would be significant. And I think the other thing I'd say is this is going to get solved by litigation. And we can look, and people are happy to talk to people about HMRC's history of litigating prepayment schemes. But two things to think about. One, VAT litigation doesn't allow for group litigation orders. Yes, there's something sort of similar, But HMRC are past masters at winning these battles of attrition by ensuring that people are not allowed to litigate as a group, and therefore forcing everybody to fund their own case, knowing that a lot of people will fall by the wayside simply because they don't have the ways and means to pay for that litigation. To give people an idea, if you're looking at going to VAT tribunal, you're probably looking at 150 to 200,000 in professional fees. And obviously more than that, because that's not going to be the final outcome of this litigation. You could well be looking at double that if you're looking at a case that's going to the Court of Appeal. So that was a very...
Geraint, I'm just going to stop you there. We had a few questions come in on some of those first bits. If I could just ask those. Is HMRC expecting 20% VAT on existing published fees, or can we reduce fees from January in order to reduce the VAT payment?
VAT will be due on the fees actually charged. So you could reduce the fees in January and say, well, the fee from January is less, and therefore we owe you less VAT. That's a commercial decision for the school to make.
I know the answer to this, but I think I'll ask it in public forum. We invoiced the January term in November. What should we do if we can't get registered in time?
So in essence, you collect the money from your parents. You can't show an amount on the invoice that says VAT, but you can collect a VAT inclusive amount in effect, and that then gets paid over to HMRC at the appropriate point. VAT invoices can then be raised to the parents subsequently, although given that the parents are not VAT registered, probably not a massive issue for them.
Yeah. So if your fee's £1,000, you'd be charging them £1,200 and not showing the 200 separately. Yes. You would simply collect the money.
Yeah. And the invoice cannot say inclusive of VAT. It would just say fees, 1,200 quid.
The points about payments in advance and potential future liabilities, might this also apply to payments which were only made for 24-25? So just a year in advance? Yes.
It could apply to anything, frankly. Whether the fees were just for 24 or 25, if somebody paid the 24-25 fees in, let's say, March 24 for the academic year 24-25, that is a payment in advance.
Great. Thanks, Grant. Sorry, I'll let you continue.
So we're now looking at slightly further ahead, some of the things that I think you should be looking at for January 2025. And this is where we start to get some good news, I think, or at least some potentially good news. The VAT recovery on costs, which is about the only silver lining in this picture, I think, for most people, the potential to recover VAT. And rather than look at VAT on post-January 25 operating costs, which I think is a pretty straightforward issue, I thought I'd concentrate on some other issues where, again, we've had dialogue with our clients, and where I think it's interesting to think about the practicalities here and the issues you need to consider. Okay. As it stands at the minute, assuming the actual legislation reflects the draft legislation, which is everybody's expectation, a lot of schools are not going to be able to recover 100% of the VAT you incur on day-to-day costs. Pupil lunches are going to remain exempt, nursery provision is going to remain exempt, bursary, scholarships, etc. is non-business. Some schools will have other VAT exempt income, property rental, some types of pitch hire, maybe investment income, one or two other things. So most schools are going to have some continuing level of restriction on VAT recovery. Now, I've done a few very broad brush, sort of back of an envelope calculations for a couple of our schools, and they all seem to be coming out at about 80, 85, 90. How representative that very small group is, I don't know, but I just pass it on for what it's worth. But with that comes some things to think about. So most schools are therefore going to be required to adopt a partial exemption method. They're going to be acquired. So this is a pretty complicated form of VAT accounting. And it looks at how you calculate the proportion of VAT on costs you restrict. Now, using income as a proxy is the default option, but there is the opportunity there to consider adopting a special method, and those can be based on anything, providing you can convince HMRC that the resulting level of VAT recovery is fair and reasonable. So these special methods can achieve an increased level of VAT recovery, but they need to be agreed with HMRC. It's a very formal process. You essentially end up with a legal contract between the taxpayer and HMRC as to the method to adopt. So if somebody is looking at a partial exemption special method, in my experience, you do well to agree one of those in less than about 18 months. My personal record is 18 years and counting, but I would say that is a fairly exceptional circumstance. But certainly, this is not a simple and straightforward thing to do. It requires time and experience to draw up and agree one of these methods with HMRC. Many schools are going to have a non-business calculation. You're going to have non-business income in terms of bursaries or whatever. So you're going to need a non-business method to sit by the side of or run in parallel with the partial exemption method. So what I'm saying is the VAT accounting, the mechanics of the VAT accounting is not simple and straightforward. Again, these are things that require, that generally, at least aspects of them, require agreement with HMRC. So you're looking at the time and the expense and experience of agreeing those, and also having a accounting system and a accounting/finance team who can deal with this level of VAT accounting complications on a day-to-day basis. A lot of this stuff can't be hardwired into an accounting system. A lot of this stuff does require a fairly significant degree of human intervention, is my experience. So that is a factor to consider. Probably the one that requires the most human intervention is all of these calculations are based on a concept which in the VAT world is called direct attribution, which is in essence being able to direct costs to particular activity. So it's a VAT form of cost accounting, if you will. Essentially, all your VAT-bearing costs are divided into one of three groups, either wholly attributable to the making of taxable supplies, residual, i.e. general costs, or wholly attributable to the making of exempt supplies. Now, I suspect in the case of most schools, most of the costs are going to be residual. So the problem is you have to do that exercise on a cost-by-cost basis. And the risk, I think, is you end up with a lot of work for not a lot of benefit. But it comes with the territory. There is no real way of avoiding it. It is the basis of all direct attribution calculations. The other thing to think about is that partial exemption and to a lesser extent business non-business calculations run on tax years. And those tax years typically run to the spring of each year. So the VAT return for March, April, or May, depending on the stagger of the taxpayer. So would you want them aligned with academic years? Would you want them aligned with financial years? Would that make the accounting and the administration easier? Again, perfectly doable, can be done, can be arranged, generally not a huge issue, but something that requires HMRC's agreement. You can't just do it. So you come back to this administration point again about things that need HMRC's buy-in. In this particular instance, it's unusual for HMRC to refuse such requests, but it is, the legislation says, the commissioners must agree. Okay, costs incurred prior to December 2024. And I think there's been quite a lot of chatter about this. So some of you may be aware that within the VAT system, there is a specific provision that says if you register for VAT, you can recover VAT on certain goods and services purchased prior to the date we registered, providing they meet one of those two tests. Relatively simple, relatively straightforward, and at first blush, an opportunity for schools to get a windfall benefit for some of the VAT they incurred prior to the 31st of December 24 and thought they'd lost. But HMRC's published guidance, which is in essence their version of the relevant regulations, the amount of tax that can be recovered is the amount that would be deductible had the business been registered at the time the tax was incurred. So in other words, you bought, let's make a simple example, you bought a piece of IT equipment for the August or the September 2024 academic year, and clearly that's, you've still got that computer, it's sitting on the desk in your language laboratory or whatever. At the time you incurred that cost, you couldn't get any VAT back. So although at first blush, I beg your pardon, that meets one of those two tests, it fails that one. Now, I think what that means in practice is that most schools are going to struggle to recover much, if any, pre-December 2024 VAT, apart from stuff which you can prove relates entirely to post-January 2025 operations. So I think the amount of VAT that schools may be able to recover on costs incurred prior to Jan 25 is going to be limited.
Geraint, can I just stop you there before you move on? We're getting a couple of questions. I think two very similar ones. We heard from ISPA yesterday that HMRC has indicated that they will allow VAT recovery on VAT exempt income from bursaries. And again, similar one saying the government are now saying they will allow recovery of costs on bursaries.
They will allow. So are you talking about costs relating? I've heard there are various things doing the rounds about VAT recovery on the cost associated with bursary funded education. Is that what the questions are talking about?
I believe that's what they're asking.
So where at the moment this is speculation, or I think informed speculation is the question. Bursaries, or at least some bursaries, appear to be a non-business activity, which would give rise to a restriction of input tax. There is the suggestion that one of the things that will come out in the budget is a workaround, in effect, to say we are not going to restrict input tax in relation to at least some bursary funded education, which will make life a little easier and may mean that some schools don't have to do a business non-business calculation, but are still left with the past exemption calculation. I don't think I've not seen that in writing, but I have heard from 2 or 3 different sources, slightly different variations of the same thing.
Thank you. And we're getting a couple of questions just on the admin. What if a school is already registered? Does this mean we can claim for 6 months before the 1st of Jan? I believe that might be talking about input VAT, maybe?
Yeah, so your position is different. So for schools who are already registered, you are looking at the current partial exemption year. So assuming you're using standard years, the one that runs to spring 25, and there will be some additional input tax recovery there. The other question to look at is costs were originally attributed wholly to taxable exempt supplies. So, for example, come back to my computer again. If you bought that computer in August, treated as attributable to the making of exempt supplies, that computer is now going to be made to used for both taxable and exempt purposes. the extent to which you can revisit that attribution. Now, one of the challenges there is the regulations around revisiting attribution do allow that, but only in circumstances where that initial attribution proved to be incorrect and you changed your mind as to what you were going to do with the cost. But I think one of the questions for existing VAT registered people is the extent to which they can recalibrate their current partial exemption years and systems.
I think there's a question very closely aligned. Someone's asked, so if you purchased an annual subscription, say in September 24,
yeah,
then obviously that's running into the new year of when you're VAT registered.
Say that runs to August 25, yeah.
Yeah. Can you claim back 8/12 of the VAT?
No, because the VAT, well, assuming the person you bought the subscription from issued you one VAT invoice in August for the full subscription amount, the answer is no. If he issued you with 12 separate VAT invoices for the monthly direct debit payments, let's say that's how you paid for the subscription, then potentially yes.
We don't record VAT on all expenses incurred currently. Can the VAT return be done on an estimate of what costs are VATable?
No.
Based on the type of expense rather than the actual invoices showing the VAT? How pragmatic can we be? I think the answer is no, and no.
I think the answer to that is no. So what you're talking about, it is very common in my experience for schools, historically, those who are not VAT registered, not to record VAT separately within their accounting system. That seems to be quite a common practice. Once you are VAT registered, you need to record VAT on a line-by-line basis. There is a very limited provision to submit an estimated VAT return in circumstances where, for reasons outside of your control, and again with HMRC's agreement, you are unable to submit a accurate VAT return. Now, you probably would get HMRC's agreement to do that for perhaps the first quarter of 2025 while you were transitioning to a new accounting system. But certainly that's not something that there is provision for in the long term.
Sorry, another one, an admin. If we registered for VAT now, could we request a start date of January, or would we register now and VAT will have to be applied earlier than January?
So you can register in advance. You register something called an intending trader, and you can request a registration date in the future. What HMRC are saying currently administratively is they are not going to accept applications on an intending trader basis from schools until after the end of October, i.e. until after the final legislation has been published. But yes, you can register from today, and as it happens, even if you registered from today, nothing changes because you still wouldn't be able to charge VAT on the on the income. So yeah, you can register today, or you can register from the first of you can apply to register and ask whatever date you want, but it doesn't matter.
Okay. And just wondered, do we have examples possibly that we can talk about now, or just simply mention, of the special method that has been used by schools? Just to give people an idea of what a special method.
I think first of all, a special method can be based on anything you like. So, you know, I've seen special methods based on floor space, head count, telephone extensions, transaction numbers, value of costs, staff time, all manner of things. I think it's fair to say, in terms of those schools, there probably isn't a partial exemption special method that is particularly prevalent in schools at the moment, because those schools who are registered for VAT at the moment have typically registered for non-core activities. So I'm not sure what value a calculation they use would be once we get past January 2025. Most of those schools, I suspect, will have to change their method of calculation anyway. So you can have a method based on anything you like, frankly.
I'm going to move on after this question, but I think it's just worth a clarification in case we've confused some other people.
Yeah.
Someone's just said, can we check the answer to your point, Geraint, about the subscriptions, for example, about the proportion that you can claim from January? I think Geraint's answered that, but I'll let him correct me if I'm wrong. But as I understood it, Geraint has just said, if you had one invoice at the beginning of that particular point, that's what's going to prohibit you from carving up your subscription invoice. I think that's the answer to your question.
Yeah.
Right, I'll let you move on.
That's all right.
Geraint.
Okay, so capital goods scheme. Much discussed. So this is the windfall benefit, and essentially for recovering VAT on past capital projects over 250 grand. I think it's fair to say that many people see it as the best opportunity schools have got to absorb some of the VAT cost and help cushion the blow, which is all good. And before I get into this, it does that. I think what I want to concentrate on is how it does that. So it's not a magic bullet. This is not a question of filling in a form, asking HMRC and waiting for the money to land in your bank account. There is a significant amount of work to do involved in getting one of these claims over the line, and what you're doing is drip feeding VAT recovery over a number of years. This is not about a single large payment to HMRC. The way the CGS works means the earliest anybody's going to see any money back is the summer of 2025, and frankly, the numbers are going to be small at that point. And the first significant refund is not going to be until the summer of 2026. And I will come on in a minute to explain the mechanics of this and how those dates are arrived at. And finally, it's going to take people until the mid 2030s potentially to see the full benefit of this. So yes, the upside might be significant, but this is a case of, well, not exactly jam tomorrow, but jam over a period of time rather than one big credit into the bank account. So let's look at how the CGS works. So I put together a pretty simple example. So this is a building completed September 2022, cost 5 million quid, £1 million worth of VAT. School registers from the 1st of November 24 and starts using the building, and that's key, for making taxable education effective the 1st of January. And the school is recovering 85% of its general cost. So those are the assumptions I built in. They're obviously not specific, but they're pretty representative of what we're seeing. So what happens? The first capital goods scheme year that this building is used was the one that ran to March 2023, i.e. the one that was in play when it was finished. Initial level of VAT recovery nil, because at that point the building was being used for exempt purposes. The next year gets you to March 2024. Again, CGS adjustment nil, because it's still being used for VAT purpose, exempt purposes. We get to the next adjustment period in March 2025, and there's basically 21 grand, £21,000, reflecting the fact that it's been used 85% for taxable purposes for 3 months, i.e. January to March 2025. So as at March 2025, realistically, that's going to get paid in probably June, July, or you're going to see the benefit of that in June, July. You've got a £21,000 upswing. What you then end up with is £85,000 coming in after March 2026, using the same calculations, and then assuming nothing changes, £85,000 a year until 2033. So yes, the upside to this school overall is just over £700,000. But that's not achieved until the spring of 2033. So in terms of budget planning, using that money to offset increases in VAT on fees or other running costs or whatever it is, there isn't a £700,000 credit in the bank. There is a series of £85,000 payments. Now, the upside's still great, but in terms of how you manage it and how you make it, that's the thing to think about. I think we also need to recognise, as I said, this isn't a simple thing. The calculations are complex. And different capital projects will have different adjustment periods. So these are a 10-year period that runs from the date the building is first brought into economic use. And potentially, you're going to have different recovery rates on different buildings because the recovery rates reflect the use made of that building. So, for example, a sixth form block might be used 100% for making taxable education. A sports block might have a different use proportion about it. You're also going to have to do these calculations for future capital projects. So when you build something in a year or two's time, again, CGS calculations come into the mix. The other question which I would just pose, and I'm not making any political point here as to the likelihood of this happening, but if you've got a CGS calculation that runs till, let's say, 2032, 2033, what happens if Labour lose the election in 2028, 2029, and the exemption is reinstated? At the moment, there's nothing in the capital goods scheme that really sort of covers that, but the assumption is that you would just simply stop doing them at that point and there would be no further basis of VAT recovery. But yeah, it is a factor which I think just needs to be kept aware of. I appreciate this is a somewhat different example, but running CGS calculations, and I'm coming back to the admin and the accounting side of things here, is a complicated and time-consuming thing to do because the level of VAT recovery will change every year to reflect the school's VAT recovery position and or the use of that building that year. So this is not a calculation that's done at the beginning and then stands forevermore. This is a calculation that will need to be repeated throughout the period. Now, the answers may be very similar, but that's it. So I thought we'd finish with a
Geraint, before you go on, sorry to interrupt. We had a couple of CGS questions. Does the CGS year change if you change your VAT return year to finish on the 31st of August, for example?
Not automatically, but I would suggest that having the two aligned is a sensible thing to do. And again, it would be unusual for HMRC to refuse such a request.
Okay, we've got a specific question, but I'm going to try and attempt to talk you through it, Grant. It's about pre-registration expenses, so not really involved with CGS actually. The purchase of a used minibus in August 24.
Yeah.
Would VAT recovery be likely as it will continue to be used for taxable business operations post January 25?
Yes, but not in full. So a minibus is not a capital item. So therefore, it's the VAT recovery on the purchase of, well, first things first, if it's a used minibus, the first question is you actually have to test, did you pay VAT on it when you bought it? Or was it sold under a second-hand scheme? Let's assume you paid VAT when you bought it. Your ability to recover VAT, it is based on the extent of taxable use in the partial exemption year during which that item was purchased. So when did you say it was bought? August 24?
Yeah.
Okay. So in normal circumstances, you're looking at the year ending March 25. So as a back of an envelope calculation, you are going to get at most a quarter of it back. Now, you might be able to increase that if you went for a longer initial partial exemption year to say August 25. The question is, well, is it worth doing for that? How much extra admin is that, etc., etc. But your default position is probably a proportion of 25%, assuming there is some continued exempt use of the asset for, I don't know, then you end up with up to a quarter of it back.
Back to a CGS question.
Yeah.
Do we do CGS claims annually or quarterly?
Annually. So they're done annually, in effect, usually for the same year as the partial exemption year. So the default period would be the spring quarter, but again, it's something you could change as agreed by HMRC.
Okay. A clarification question on CGS.
Yeah.
Is the CGS reclaim determined by the overall school partial exemption rate or by the specific use of the building in question?
Depends how complicated you want to make the transaction. Calculations is the answer. So the strict legal answer is that you would look at the use of the particular asset. But it is not uncommon to agree with HMRC that you would use the global recovery rate for the business. So it depends how complicated you want to make it.
Right, Geraint, I'm going to let you move on.
That's all right. So, as I said, we're going to finish with a little bit of crystal ball gazing to some extent, but sort of future issues and uncertainties. So, one of the surprises, I think, in the draft legislation is that it's still going to allow fee-paying schools to treat items closely associated with education as VAT exempt. And this includes, or currently includes, normal school catering. But the legislation makes no mention of school catering. The legislation simply talks about items closely associated with education. Now, the history of how school catering got to be within this exemption is somewhat shrouded in the mists of time, but it seems to be based on an analysis HMRC did back in the 70s, based on the legal obligations for local authority schools, which have subsequently been amended and changed and yada yada. Now, I think where this takes us is, I suspect it will be a very brave Secretary of State who decides to tax school lunches at state schools. But it would be relatively easy to carve fee-paying schools out of that exemption. And I think the reason I bring this up is I've talked to a number of schools who are exploring the extent to which this exemption can be stretched. And I've had discussions around breakfasts and teas and various other things. And I think the advice I would give here is, well, okay, if you're saying that feeding a child lunch is closely associated with education, why is feeding a child breakfast any less closely associated with education? Fine, I can understand that argument and I can see its merits. I think the risk you run is that if you start stretching this envelope, somebody will go in HMRC, well, hang on a minute. Actually, is it closely associated with education at all? Is school catering closely associated with education at all? And if it is, do we want to actually, particularly now we're out of the European Union, so we can change the law with a great deal more freedom than we used to be, make it clear that what we mean here is school lunches. So I simply put that out there for people to think about. I know it's, as I said, I've had these conversations with a few people. There is an element there, I think, of beware what the unintended consequence, as it were. Another question, which is, if you like, the same sort of thing put in slightly different plan, but where does school catering end and board and lodging begin? So we have no legal definition of board and lodging. We don't know what it includes. It's not a phrase that, to the best of my knowledge, exists anywhere else in VAT law. What do they mean by board and lodging? Now, one assumes that the courts will say you should give those words its everyday meaning. But you know, if you're feeding kids breakfast, is that board and lodging or not? Same question, does board and lodging include additional care costs? So if you're charging, as I know some schools do, for example, for taking people to a medical appointment or something like that, is that actually care and therefore exempt as childcare rather than the provision of board and lodging? I think if you're going to give board and lodging its everyday meaning, it's quite difficult to see how taking a kid to the opticians or the doctors or the hospital or whatever it is part of normal board and lodging. It's not something that you would expect a hotel to do, for example. And talking of hotels, there has been some discussion around what's called the 28-day rule. So the 28-day rule is something which applies in the hotel and guest house industry. And what it in essence says is that if somebody is in occupation of the room for more than 28 continuous nights, then from the 29th night, VAT only becomes due and payable on the additional services, so the cleaning and the catering or whatever else they happen to provide, not on the cost of the room. Now, a couple of people have speculated and have talked to me about whether or not that rule could apply to pupil accommodation, particularly if, for example, it's not used outside of term time, except in the long summer vacation, and where children have a designated accommodation. I don't have an answer to that. I think the only comment I would make is that, first of all, that 28-day rule is not enshrined in legislation. It's an extra statutory concession that's been around for a long time, but it's an extra statutory concession written by reference to the legislation as it applies to hotels, inns, or similar accommodation. There are some quite unusual cases about what a hotel, inn, or similar accommodation is, but I'm not convinced it applies to pupil accommodation, I have to say. I think people are reading across bits of the legislation there that doesn't apply. So that was a very quick run through in just under an hour. We have about 5 minutes left, I think, Anjali, if anybody wants any additional questions.
Something that Geraint, you and I talked about, you might want to say a few words on. As part of the administrative sort of overhaul, we were talking about the fact that where schools weren't necessarily VAT registered or were VAT registered, and those were trading subs, where they had different things going on. I don't know if you want to say a few words about looking at that structure and really understanding what that means possibly for schools.
Yeah, so you've got a number of schools where the school itself is currently not VAT registered, but they have a trading subsidiary who undertakes typically some sort of property related activity in the main. I'm sure there are examples to do other things. And where that non-educational activity sits in the commercial subsidiary. There are a couple of questions, I think, for those organisations. One is, does this change in VAT liability change the dial on where you want those activities to sit? Does the rationale for having the commercial subsidiary now change? Question mark. If it doesn't, and you wish to retain the subsidiary, would it be sensible to create a VAT group for the subsidiary and the school, assuming that is possible? And that will depend on the legal status of the school, but in essence, to have a single VAT registration that covers the two entities. And of course, you then have the question around, well, to what extent do we need to think about charges going from the school to those subsidiaries for, let's call them broadly, management and administration services, shall we?
Oh,
You still there, Anjali?
yes, we're still here. Sorry. I was reading questions as they were coming through. We had another CGS one. Again, I think it's just for clarification. I think you have answered this. If we agree with HMRC to make our partial exemption year aligned with our financial year, would a CGS claim be made at the end of the tax year or at the end of our financial year?
Again, in theory, you can have either. My advice would be that you are far better off from an administrative perspective, aligning all three. Otherwise, you're going to end up having to sort of cut and shut calculations, as it were, at different points of the year.
Any advice? I mean, this could be a generic one almost, just to give your thoughts on Geraint. Any advice on the composite supplies concept and bundling lunches and wraparound care in with tuition? I'm going to let you decide how you answer that one.
I've got to explain composite versus multiple supplies in 4 minutes. I think that might be a task even beyond my abilities. There is clearly an issue here that there is clearly a significant risk that for schools who look to unbundle parts of the overall provision and ascribe a different VAT liability to particular things, that will be attacked on the composite versus multiple supply point, and HMRC will say, well, the predominant element here is the education, therefore everything should be taxed accordingly. I think if schools take a conservative approach and, for example, unbundle the cost of school lunches, that risk is reduced, because that seems to be a point that, regardless of its somewhat arcane legal basis, HMRC appear to be prepared to accept. I think that the real risk comes for those schools who attempt to push the envelope on that. And the other thing I would say that HMRC will certainly take a dim view of is any attempt at value shifting. And by that, I mean hiking up the cost of certain things which remain exempt and reducing the cost of things which remain taxable. So I don't think there's any way to extinguish that risk entirely, Anjali. I think there are ways to manage it.
Yeah, I think so. We have multiple questions coming through. I think what I will need to do is see how many of those we can answer on our FAQs. We have about a minute left. I will ask a very simple one that Geraint could answer in 30 seconds, hopefully. If you're part of a VAT group, is the partial exemption done on all the companies that are part of the group?
For the purposes of a 30-second answer, yes, but you can have one that treats different parts of the group with slightly different calculations. Again, it's a question of how complicated you want to make it. Partial exemption is one of those things that can be made almost as complicated as you want.
Yeah, and normally, Geraint, you always go out with our client base to agree whatever basis with HMRC. So trying to get that in writing. I'm really sorry we couldn't answer all the questions. I can see them all here. But as I said, we will try and do the best that we can on our FAQs. Again, we will look to try and revisit putting on another webinar if a number of questions start to come through after the budget per se, or certainly coming through in January when people are possibly struggling with all the things that they need to do. I can only thank you for joining us today. And lovely. I just want to thank Geraint, who is a fountain of knowledge, and I'm sure he'll read a lot of these questions with interest. So thank you all for joining us, and hopefully we will see you in some capacity in the near future. Thank you. Bye, everyone.